Hello, and welcome to the Logistics Management Podcast Series. My name is Jeff Berman. I'm Group News Editor for Logistics Management Magazine and also the Peerless Media Supply Chain Group. Today, it's a real pleasure for us to welcome back Rick Watson to our podcast. Rick serves as founder and CEO of New York-based RMW Commerce Consulting. Rick founded his firm after spending more than 20 years as a technology entrepreneur and operator exclusively in the e-commerce industry with companies like Channel Advisor, BarnesandNoble.com, Merchantry, and Pitney Bowes. Rick's work today is centered on supporting investors and management teams incubating and growing direct-to-consumer businesses. Most recently, in partnership with WHP Global, Rick was a critical resource in architecting the WHP Plus platform, a new turnkey direct-to-consumer digital e-commerce platform that powers retailers such as AnnKlein.com and also JosephAboud.com. And also, I just wanted to let the audience know this is Rick's third time joining us on the Logistics Management Podcast Series. Hey, Rick, welcome back. It's great to have you.
Thanks a lot, Jeff. I appreciate you having me on.
Yeah, absolutely. So Rick, there's a few different directions we could go in, but why don't we start with sort of some recent events that we've been seeing? And I thought the first place to start would be the recent respective rate announcements for 2024 made by the parcel duopoly, if you will, of UPS and FedEx, with matching 5.9% GRIs for 2024, as well as the new lexicon of demand surcharges, shifting away from the more common term of peak surcharges, I guess. Why don't we start with that, Rick?
Yeah, no, it's interesting. I think we have a few topics related to this sort of duopoly conversation, and it also kind of ties into, I think, one of the things that we're going to talk about next, which is sort of the Teamsters negotiations,
Yes.
where we're talking about kind of UPS volume, but I think FedEx was kind of happy to sort of seize the initiative and announce maybe a month or two earlier than maybe they have in past years
Yes.
to potentially put some pressure on. I kind of saw this as a way for them to put a little bit of pressure on UPS, set the tone for this round of price hikes, particularly with what they see as a little bit of uncharacteristic UPS weakness in the face of their recent kind of volume challenges with negotiations. I think it is slightly about in line what most people were expecting.
Mm-hmm.
Um, you know, I think given the slowdown in demand from a parcel and freight point of view, no one was expecting kind of a full, I would say like kind of like a standard sort of full priced raise, which would be kind of like between 6 and 7 or something like that,
Sure.
between 6 and 8 even, depending on the year. But um, this 5.9, I think most people were like, yeah, it can't go higher than that,
Mm-hmm.
just based on the fact that everyone is cutting volume and trying to save money, however they can.
Yeah, absolutely. And you're right in the sense that they definitely acted a bit earlier. I was looking earlier to see when UPS traditionally announced rates, and it looks like it was closer to November or so. So definitely more in line timing wise. You just mentioned the Teamsters deal, or the recent new agreement, that is a new 5-year agreement between UPS and the Teamsters. Let's dig into that for a minute, Rick. It was getting pretty scary there for a while, right? I mean, given that UPS handles about, I believe the estimate is roughly 6% of US GDP, certainly not insignificant, certainly not a small number. It got worked out. There's a deal in place. Obviously, price hikes coming from UPS in order to meet the terms of the deal were certainly expected. But what else? If we peel the onion on this deal, what does it mean, I guess, for both UPS and also for its shipper customers?
Yeah, look, I think anyone who's watched UPS CEO Carol Tomé over the last couple of years um, really felt that she was not going to let this be some kind of protracted, ugly strike situation. She
Hmm.
knew that the Teamsters were kind of like were bracing for that, uh, for a long protracted fight if they needed to get the demands that they wanted to, and I think felt that they missed the last time around.
Sure.
Um, and so I think there was some lingering, if you kind of read the head of the Teamsters in his quotes leading up to this in the last year or so, there was definitely that sentiment that we missed something last time. We're not going to make the same mistake twice. So that's kind of the backdrop. And I think, look, obviously there's press releases and statements during the entire situation. And I'll be honest with you, I ignored most of them because I felt that a deal was going to get done and it was going to get done at the last minute.
Sure.
So um, UPS just simply loses way too much money to be gone for even half a day.
Hmm.
Uh, you know,
Yeah.
and whatever concessions they would have to make for that not to happen would be worth it. Which really, to me, kind of knowing that gives the Teamsters an edge in the negotiation, which I think is kind of what happened from that side. So that's kind of the backdrop of the back and forth. I don't know if you have any comments on that, and then we can talk about kind of the deal itself, as well
Yeah.
as kind of the partial diversion and things like that.
Yeah, I mean, let's hit on that for a moment because in advance of the deal being done, there certainly had to have been a fair amount of anxiety as it relates to what's going to happen to my packages on behalf of shippers really of all sizes that UPS serves. Um, how did you see things playing out before the deal got done? I guess in terms of the fear factor, if you will.
Yeah, look, I think brands and retailers were rightfully nervous because even if you thought that it was going to happen, um, there's no perfect scenario, and if as a business owner you aren't protected on the downside, then you could have a serious problem on your hands. And so
Hmm.
I think the deal got finished at such the last minute, maybe like a week or less before the deadline, that almost every major player had to have some kind of contingency. And that kind of led to um, that essentially, people need to prepare in advance of a strike, and so that led to parcel diversion to the tune of what was the number? The number I heard was 1 million parcels a day.
Something like
I
that.
think,
Yeah.
yeah, I think on the UPS earnings call, and the way the UPS CEO said that was about 1/3 split from FedEx, 1/3 split from the USPS, and 1/3 split from regional carriers.
Yes.
Um, and so uh, I think that was the intensity of that's a million parcels a day. That's not a small number. I'm
Mhm.
curious your thoughts on that.
Yeah, I mean I couldn't agree with you more, Rick. I mean, it is not insignificant, and there was a lot of uncertainty to be sure. Obviously the outcome that was achieved was welcome news to be sure. Do you think now that for the shippers that maybe took action and went elsewhere, the three-way pie, if you will, that we just discussed, do you think they will eventually return to UPS, or do you think they'll start to hedge their bets more?
Yeah, look, um I think the challenge, so I think the USPS bucket um is definitely kind of pretty low hanging fruit. I think the regional carriers, UPS, could probably change contract terms to make it attractive for them to bring back some of that volume by giving them discounts on some lanes and charging them more for others. They
Right.
can use their kind of combined power. I think FedEx, given the fact that, most of these people are not signing month to month agreements, it's kind of there's probably a year tail on those things. And I think
Sure.
UPS is going to have to work harder to win that business back. And I mean, UPS has indicated that, look, by the end of the year, we're going to be kind of on a run rate point of view. We will have recovered that volume, which is pretty aggressive talk from UPS, not knowing how the negotiations are going to happen, which also kind of like, I thought that was a odd comment. I mean, I know maybe financial analysts wanted to hear like, how are they going to fix it?
Yeah.
But they, I think they kind of see some of their negotiating leverage with the shippers, giving Wall Street that kind of signal that they're going to get all the volume back.
No, absolutely. Um, and just one last quick tidbit on the Teamsters. I'm sure you saw it in the Teamster statement. Once the deal was completed, Teamsters president Sean O'Brien made a little add-on comment at the end along the lines of, "Hey, Amazon," something I'm obviously paraphrasing here, but it was something like, "Hey, Amazon, take notice or take notes on what just transpired here." Um, Clearly I'm jumping the gun, but the relations between and content, if you will, between Teamsters and Amazon certainly appears like it will be getting a bit more prominent, a bit more ink or digital air going forward. Would you agree with that?
Yeah, I think so. I mean, look, I think we're in a time where labor market has been tight the past couple of years. And so I think the workers, particularly organized workers, have more leverage than they're used to having in previous times. So I wasn't surprised to hear it, and I do think it's going to get more contentious going forward.
Yeah.
Um, there's another aspect that I think that we can cover on the deal as a follow-up, which is like, who really won? Like, okay, the Teamsters got more benefits, but does that kind of play into UPS's hands in any way with regards to them automating more of their facilities and reducing headcount over time?
Mhm. Yeah, it's an open question, but we'll have to see how it plays out. Um, Rick, why don't we shift gears for a moment? And I'd like to get your take on sort of the state of the economy. I usually, when I talk to people in trucking or rail, I usually say, "Hey, the freight economy," but obviously applies to parcel express. I mean, there's a lot of mixed economic indicators out there as it relates to parcel express. Obviously, reduction in consumer demand is front and center. And we see that in lower package counts, obviously. Um, what are sort of the things that are jumping out to you? And I just asked that because we are seeing some sort of moderation in inflation. I think it was up 1 basis point last month, but still on the right track. Inventory drawdown appears to be happening at what rate. It's hard to tell at times, but it's working itself out, hopefully. And also import levels, right? I mean, a year ago at this time, imports were booming, and now they're finally into 2023. They're down, but I guess they're getting less worse, would be the way to put it. That's sort of my mini assessment. I'm just wondering what you're seeing or feeling about sort of the conditions of the parcel slash freight economy.
Yeah, look, I think mixed is the best way to put it. Um, the I think the short story is everyone is, if you kind of look at the things that drive e-commerce, essentially you have like traffic, average order value, conversion rate. Those are kind of your three primary metrics to let you know, like, am I going ahead of, am I on plan or not? Um, and what we find with a lot of brands and retailers out there, traffic and average order value are down. So basket sizes are down and traffic to the website is down. And that's because consumers are reprioritizing spending, deferring purchases, trading down from premium brands to more national and off-price brands.
Yeah.
And so all that has put pressure on the parcel markets. I mean, freight too, also. But a small parcel, for sure. And so there's more slack in the system.
Hmm.
I think it's one of the reasons why we saw a lower rate increase from the carriers. I think there are a couple of categories that have done well, including like beauty, off-price, value concepts. But
Okay.
there's so many that haven't done well, like department stores, fashions, general merchandise, electronics. A lot of those big purchases are off, as people like go out on vacation rather than replace their TV or something like that.
Okay, got it, got it. Absolutely, and that sort of is a nice segue, Rick, for 2023 peak season, or perhaps lack thereof. I mean,
Yeah.
and I just say that because when we talked during the pandemic, uh, it was obviously quite the opposite, right? With it sort of being peak season all the time. And now, for some of the reasons we just talked about, I guess most notably, in a sense, would be the reduced consumer demand. Um, how do you sort of gauge or assess what is or maybe is not happening as it relates to the specter of a 2023 peak?
Yeah, look, I mean, look, for brands and retailers, the biggest thing is not am I going to be over my fulfillment capacity? It's more like what fulfillment capacity do I need to satisfy a demand which might be uncertain? And so I think most brands are in the situation, and retailers, they're in the situation where uh, they're almost screwed either way.
Sure.
If they overestimate, then they have a lot of workers that are just standing around, waiting for the volume to rise, or maybe a promotion that didn't go as planned. If they underplan, then they have unsatisfied demand and unhappy customers. So I think this is a tricky time. We're definitely not in a situation where, it's going to be like, how can we overplan as much as possible because we know the demand is going to be there? It's more like, how do we know where the consumer is going to land? Because the holiday is a little bit different time than the rest of the year, because of you know, the gifting aspect.
Yeah.
Um, Usually you're only trading like, a lot of the rest of the year, you're trading down within a category. So like usually, let's say, and I think Target has seen this a lot. If I used to shop at Target, uh, or a national grocery chain, maybe now I'm shopping at Walmart and getting my groceries at Walmart too. Um,
Okay.
During the holidays, if you want to buy $100 gift, like if you have a $300 gift budget for your friends and relatives, in some sense, it doesn't matter what exactly you get them. So, like, jewelry could trade off for like a trip to the spa, which could trade off to like an iPhone, to something else. So almost the more value you can get in your holiday shopping, you can get, I think consumers will be looking to get gifts for 5 or 6 people with the same amount of dollars that maybe last year they only had, or 2 years ago would have gone to 4 people.
Yeah.
And so that could trade off across categories too this year, which I think, will be something that will be interesting to watch.
Yeah, absolutely. And we sort of saw some impact, I guess, relative to the shift in services from straight up goods buying, which was what everyone and anyone was obviously doing when they were stuck at home during COVID. So that's that can't be overlooked. I mean, people going to baseball games, movies, vacation, you name it. But I thought, Rick, maybe we could just touch upon, we had briefly discussed regional last mile carriers. Certainly, they were more than busy in recent years. I'm assuming things have slowed down a bit for them, as they have for the big two of FedEx and UPS. How would you sort of assess the current state of specifically last mile carriers, last mile logistics?
Yeah, look, last mile logistics, I think is an interesting spot right now. I think USPS has been definitely improving their game with USPS Ground Advantage, and people injecting into their network. I think you see Amazon really investing in their last mile facilities. Like, we talk about the other carriers, but we also can't forget, we've been on a logistics podcast for the past 20 minutes and haven't really mentioned Amazon yet,
Yes.
which is which I think is interesting. They're actually going to be doubling their last mile facilities around major cities, which would give
Mhm.
them a lot more same day, next day coverage.
Yes.
And so I think that's a huge growth area for them, and particularly since they just regionalize their network. I think the other players, I think you're going to see consolidation in this space. It's almost like some of these regional, like there's almost like too many regional carriers right now for the
Mhm.
demand that's in the system, and that
Yeah.
usually tends to lead to consolidation, either in the regional carrier side or the last mile um, point of view. It's hard to, if the economy stays the same for another couple of years, it's hard to understand how is there enough volume to go around, and then ownership and investors start to think about combining entities to, make the network more efficient, uh, and kind of squeeze a few more dollars out of the system. So I think you'll see some of the last mile players that popped up during the pandemic start to wonder if they are a better fit as part of a bigger carrier.
Yeah, absolutely. And yeah, you're right. We're 20 minutes into our talk and we barely mentioned Amazon. And I know we talked a little bit late-ish last month about how Amazon is poised to relaunch its Amazon shipping service, clearly designed to compete with the duopoly. It was in the Amazon shipping service was halted basically at the onset of the pandemic. um let's peel the onion on that quickly, Rick. What does that mean for FedEx and UPS? What does that mean for the market at large if Amazon uh gets this rolling in a meaningful way, which I think is probably the expectation that people should have, right?
Yeah, look, I think I think in the short term it doesn't mean a whole lot, because I think most of these players have kind of big long-term contracts. I think Amazon is going to start likely with a number of their customers and routes that could use Amazon transportation. Long term is where you need to worry about Amazon, right?
Hmm.
Because whereas they start with select lanes, select shippers, they usually start to move more and more upmarket and more down market. I think right now they're only looking at, obviously consumers are kind of out of the question. Amazon doesn't really have enough infrastructure to do any kind of consumer to consumer shipping network like UPS or FedEx does, or the post office. But I think business to consumer shipments, that seems to be the target. And I think they're kind of they're trying to get the higher volume shippers in this initial trial. And because I think they're trying to make sure that their initial forays have some kind of guaranteed volumes and contracts, and not kind of the smaller shippers whose volume might be much more uneven.
Okay. All right. Interesting. And just to wrap up here, Rick, you know, let's peek into next year and into 2024. We'll be another year away from the COVID craziness. Obviously, it's the impacts are still with us and are likely to be with us for some time. But what would how would you sort of, if you had a crystal ball, I guess, what would be in store for 2024? And I'm obviously not talking about net earnings or anything like that. I'm just like in terms of trends, expectations, what could we be in store for as we look at our markets?
Yeah, look, um I think a couple of look, I think predicting like we're still in this situation where we're hitting a bullwhip from the pandemic, and that has led into interest rates, which has affected consumer, inflation, and at trying to counteract inflation, and then consumer spending patterns. I think everyone's crystal ball is so cloudy right now. It would be foolish of me to try to make a prediction
Yeah, yeah.
in one way or the other. I think most people are making two or three plans.
Hmm.
And I think, to be honest, I think most people are going to be predicting slightly more bearish next year than this year.
Yeah.
And the reason is because interest rates I don't think anyone's predicting that interest rates are immediately going to go down. And I think that would be the signal everyone is looking for. And
Okay.
so, like, I know so many brands and retailers that made 3 plans this year, and the actual performance is below the worst plan.
Oh man.
And,
Yeah.
it's not like it's fallen off a cliff, but it might be 5 to 10% off of their worst plan. And I think UPS itself is in this bucket.
Okay.
And so I don't see that changing unless something substantial changes with interest rates and inflation. And the Fed, despite I think doing a pretty reasonable job given the situation, hasn't figured out how to slow down inflation in kind of consumables and particularly like grocery, um, and other costs like housing.
Mm-hmm.
And so those are kind of the sticking points that, you know, there's no indication that that's changing soon, which I think I think people entered this year a little bit cautious. I think people are entering next year cautious, and I think that's probably the right footing in the parcel industry.
Yeah, no, well said. Well, listen, Rick, this brings us to the end of our allotted time for today's podcast. So, on behalf of Logistics Management Magazine, as well as the Peerless Media Supply Chain Group, I'd like to again say thanks for returning to join us again for the third time, a hat trick, if you will, to borrow a hockey term.
All right, I love the hat trick, and I appreciate the time again, Jeff.
Yeah, absolutely. And real quick for our audience, for those of you on LinkedIn, feel free to go ahead and check Rick out there. He's also on Twitter, simply at Rick Watson, and he also has a podcast of his own called The Watson Weekly. So check all those things out. And also for those of you on Twitter, please feel free to go ahead and give us a follow, simply at Logistics MGMT. And also, please feel free to go ahead and to subscribe to our podcast. Just go ahead and look for Supply Chain 24/7 wherever you get your podcast. Thanks, everybody. Have a great day, and we'll catch you next time.